PLTR stock news. Is too late to buy into Palantir stock. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today's discussion revolves around Palantir Technologies stock. In this video, we will dissect 3 articles. The first one asks, is Palantir Technologies stock currently a prudent investment? Following that, we'll delve into another article titled, Why Palantir Technologies PLTR Deserves a Spot in Your Investment Portfolio. Finally, we'll explore the question, has the window closed on investing in Palantir Technologies stock? Whether you're already holding PLTR stock, considering increasing your holdings, or yet to make a purchase, this video caters to you. To stay updated with more content on Palantir Technologies, remember to show your support by engaging with the video. Like, comment your thoughts, subscribe if you're new. With that, let's dive into today's articles. Palantir Technologies operates in the realm of big data and analytics, catering to both commercial enterprises and government clients. The company also specializes in artificial intelligence, a focal point for Wall Street this year. Many investors are keen on putting their money into artificial intelligence and machine learning companies, given the substantial buzz surrounding these technologies. Palantir Technologies stands out as a top player in this sector, which explains its impressive 100% surge in stock value over the past year. However, there's debate among investors regarding whether the optimal time to buy or sell has passed. The share price currently stands at a relatively high $16.77, and it recently experienced a 3% dip. Despite this, some investors hold that it could potentially rise to $25 in the next 12 months. This raises the question of who holds the more accurate prediction. Now, let's delve into their offerings. Data has evolved into a paramount resource, surpassing the value of traditional commodities like gold and oil. Effectively harnessing data can confer a competitive advantage to companies or government entities in the face of rivals or threats. Palantir crafts tailored software solutions for its customers across 4 platforms: Gotham, Foundry, Apollo, and AIP. Of these, AIP is currently attracting the most attention, given its focus on artificial intelligence technology. Palantir Technologies excels in enabling organizations to analyze data for making informed, real-time decisions, ultimately benefiting the company's long-term prospects. Despite ongoing geopolitical challenges and market volatility, Palantir's focus on artificial intelligence sets it apart from the broader stock market. Commercial enterprises are increasingly adopting AI-driven software to gain a competitive edge through data utilization. Analysts hold an optimistic outlook for Palantir's long-term growth trajectory, though short-term growth is viewed with less enthusiasm. Revenue estimates for this year stand at $2.2 billion, with projections suggesting sales could surge to over $3 billion by 2025. Indicating significant upward momentum. Financially, Palantir is robust, boasting a healthy free cash flow, rising net income, and positive earnings per share over recent quarters. The anticipation of positive earnings in the upcoming quarter may make them eligible for S&P 500 inclusion, driving increased demand and subsequently raising share prices. With $3.1 billion in cash and short-term investments and minimal debt, Palantir is financially well positioned. Their $1 billion share repurchase program, aimed at reducing outstanding shares, is expected to further support higher earnings per share, which in turn positively impacts share price. However, the stock's forward price-to-earnings ratio of 78 is considered high, ideally preferred below 50. When considering this valuation relative to their growth rate, the PEG ratio drops to 1.2, suggesting a more reasonable assessment. While not classified as cheap, holding Palantir for the long term and allowing their growth rate to unfold may justify the current valuation, potentially taking 3 to 5 years. Institutional sentiment towards Palantir has also shifted positively, with Zacks recently assigning a buy rating to Palantir's PLTR stock. This ranking system designates 1 as a strong buying opportunity, 2 is a buying opportunity, 3 is a hold, 4 is a selling opportunity, and 5 is a strong selling opportunity. This indicates a favorable stance from Zacks towards Palantir. Indeed, Palantir's favorable rank of 2 and a high VGM score of B are strong indicators of its investment potential. Research suggests that companies with such rankings and ratings often present excellent investment opportunities. While there may be fluctuations in the share price, potentially dropping to $15 or even $12 over the next year due to unpredictable investor sentiment, the focus should be on the company's long-term growth trajectory. Acquiring the stock at the most advantageous price is the goal, and given their specialization in artificial intelligence and machine learning, the future looks promising. Goldman Sachs and Morgan Stanley both foresee substantial potential in the artificial intelligence market, estimating it could reach trillions of dollars. Even more conservative estimates, like the one from TD Cowen analysts projecting generative AI software to reach $81 billion by 2027, present a substantial opportunity for Palantir. While the current valuation may seem high, it's important to recognize that future accounting ratios will likely be adjusted based on anticipated growth rates. This suggests that holding onto the company for the next 3-5 years, regardless of short-term fluctuations, is likely to yield profits. It's worth noting that the current share price already factors in a significant amount of expected growth, which explains its high valuation. For those seeking quick profits, this might not be the ideal investment. For long-term investors, Palantir appears to offer an exceptional opportunity, potentially surpassing other AI companies in terms of growth outlook. With Palantir's specialized expertise, sustained growth over the coming years seems plausible. Wall Street analysts project double-digit percentage revenue growth and a fourfold increase in earnings per share by 2024. This signifies a substantial expansion in both earnings and revenue, aligning well with investors' interests. This could very well mark the early stages of a prolonged period of profitability and expansion for Palantir Technologies, which would undoubtedly have a positive impact on individual portfolios. However, it's crucial to acknowledge the associated risks. If you're seeking quick profits in the short term, Palantir may not align with your investment strategy. On the other hand, if you're committed to holding onto the company for the next 3 years to fully capitalize on its projected growth rates in revenue, earnings per share, and subsequently share price, then Palantir could be an ideal fit for your investment portfolio. Always conduct thorough research and avoid overexposing yourself to any single high-risk growth company. A commonly recommended threshold is around 5% of your portfolio allocated to such investments. I'd be interested to hear your thoughts on this as well. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!